There's a quote that I love that it says, "You'll be the same person 5 years from now, except for the books you read and the people that you meet." And so, you're the same person 5 years from now. And it's not just about reading books. It's about education. Right? It's about learning. It's about growth.
Welcome to the Wealth Strategy Secrets of the Ultra Wealthy podcast, where we help entrepreneurs like you exponentially build wealth through passive income to live a life of freedom and prosperity. Are you tired of paying too much in taxes, gambling your future on the stock market, and want to learn about hidden strategies for making your money work for you? And now your host, Dave Wolcott, serial entrepreneur and author of the best-selling book, The Holistic Wealth Strategy.
How's it going, everyone? Welcome to today's show on Wealth Strategy Secrets. Our next guest is Bronson Hill. Bronson is the managing member of Bronson Equity and is a key player in the real estate industry with over 2,000 multifamily units. You may have heard Bronson on the Mailbox Money Show, or you may have even read his latest book, Fire Yourself. Bronson, welcome to the show.
Hey, Dave, excited to be here. I know I just had you on my show recently, and so excited to return the favor and just really enjoy our conversations.
Yeah, likewise, Bronson. It's always just so great to connect with like-minded people and, really try to extract some insights that we've learned through our journeys and try to impart that upon our listeners so that they can learn and grow as well, wherever they might be in their journey. So tell us a little bit about your book. Let's jump into your book first, Fire Yourself. What does that mean to you? How are you inspired to write the book, and what are some of the core concepts?
Yeah, so it kind of takes me back a little bit to my journey. I was a high-paid medical sales professional. Was wearing scrubs, going into heart surgery, and making over $200,000 a year, working 30 hours a week. And a lot of people in the medical field. I worked with a couple of physicians that made $3 million a year each, but they didn't have what everybody wants. Really, people say financial freedom. But really what we want is time freedom, right? The ability to make money while you sleep, as Warren Buffett says. And so it really took me on a quest, over time. This was years ago, just kind of learn, okay, if I own rental houses, it really, I had 4 or 5 rental houses. It didn't get me to a place where I was making money without a lot of effort. Or if I was doing stock trading or options trading, I had some big losses, and I realized I'm not a good options trader, but also it wasn't really passive. And so the idea of being able to scale up investments, being able to grow. I learned about syndication. And so it's a little bit of my journey. But in the book, Fire Yourself, I talk about being a registered investment advisor for a few years. I call myself now a recovering investment advisor because sometimes Wall Street doesn't always, there's not an alignment of interest, right? So learning about just things in Main Street versus Wall Street that can really help you grow your wealth consistently over time without taking up more of your time. So we give some strategies on how to identify and find deals, also how to vet really any deal of any market, vetting the specific market, vetting those operators, and vetting the specific deal. And so it's really kind of a how-to for, I've had over 2,000 calls, one-on-one calls with high net worth investors worth over 2 million on average. And a lot of times it comes up, how do I actually get started doing this? How do I feel comfortable to kind of pull the trigger and do it? And so that's really what this is a guide for those that are getting started.
Yeah, that's awesome. Tell us a little bit about being an RIA. We've had several guests on the show with people who've come from that background. And I think it's so fascinating to really kind of unpack this because you've gotten to see it from both sides of the coin. And I think you have a unique perspective, to really create clarity for people because, let's face it, Americans still have 90% of them have, substantial holdings in 401ks, IRAs, some type of, stocks, bonds, mutual funds, and they still have a traditional advisor. So what are some of the key things that, you learned from being an advisor that's different about now?
Yeah, so I think there's a lot. It's almost like the Wizard of Oz when you see the Wizard of Oz as this grandiose person, and then they realize it's just this little guy behind a curtain, and they say, "Pay no attention to the man behind the curtain." That's kind of what once you really you can look at something and look away, but once you really see it, you can't really unsee it. And so seeing things such as there's a study that came out that showed that of those managing in Wall Street over $100 million in a fund. over 50% of those had $0 invested along with their investors, right? So there's a misalignment of interest. And so that's one thing we look for is our interests aligned. If your portfolio goes down by 50%, your Wall Street advisor still gets paid. And so a lot of what they do is really managing your psychology to get you to, prevent you from selling. Now, sometimes we need that. We do need the ability to help to save and things like that. But that's kind of 101. 101 is, pay off credit card debt. Don't, spend more than what you have. And as you start to invest and you start to learn, you realize that having the volatility that you get through the stock market. And I'm not anti-stocks. I own stocks. I own different things. I own some crypto. I own other stuff. But just believing that, managing money is not like being a brain surgeon. It's not like you have to have the highest level person in the world doing it. It's just, and the one thing I've learned about investing is no one cares about your investments the way that you do. And so as much as you're trusting somebody else, when you're trained as a registered investment advisor, they use this word called suitability. Now, suitability is just simply saying, okay, if you're an 80-year-old male, you shouldn't probably go into startup ventures because you could die in the next 5 or 10 years. There's not really, you may not even see the benefit of that, versus if you're somebody with a certain net worth, maybe certain investments make more sense. But even the word suitability, we don't really use that. Like, I wouldn't want a suitable spouse or a suitable investment or a suitable vacation, right? Those are just kind of like, okay, well, let's get you into the suitable thing. And so I've met some advisors that are great. And I've met some that are like, if these people are wealthy, they did not get their wealth by using these strategies. And so that's where I find it's almost a bit hypocritical to just advise people to do the most conservative things. Now, if you have a bunch of money, you don't want to lose it, it can be okay. But even then, there's a lot of fees that are not disclosed. Tony Robbins said that the average mutual fund will say their fees are 1.2%, but it's actually more like 3.2%. There's all these hidden fees they legally do not have to disclose. So there's a lot of things about Wall Street that I find are just not what they seem. And I find Main Street is a much better place to be.
Yeah, couldn't agree more with that. I started asking questions why when I started this journey, right? And that was one of the things that really, turned me off to traditional financial planning is, they would just say things like dollar cost average, right? And you're going to make 7%. The market's always gone up over time. So let's look at that over your next 35 years. And you're just going to go up, over time. But that really what that tells me is that they don't have a good answer. They're just averaging because they don't know what to really focus on. Right. And then there's other things like, deferring your taxes, they think is a good idea, when in actuality, all you're doing is kicking the can, further down the road, and you're going to pay a hefty bill when it comes time to withdraw those funds at ordinary income tax rates, which are likely going up in the future as well, versus getting into some tax efficient things. And another thing that's interesting is the 99%, right? Like, so if you're in the 1%, I mean, the listeners on our podcast and your podcast, they're in the 1%. So why are you taking advice from a 99%er? You actually need a different type of advisor and a different type of plan. That's kind of the retail plan.
Yeah, exactly. It reminds me, I don't know if we were talking on my show about this, but like Robert Kiyosaki, I think we were talking about this, that I saw him, he gets very passionate when he speaks. The guy wrote Rich Dad, Poor Dad, the book, the little purple book that kind of changed a lot of people's lives. And he said one time, he was like yelling, like, don't listen to poor people. The idea of like, if you're taking advice from someone, and Buffett talks about this too. He's like, if somebody, the person who comes in a limo into Wall Street to get advice, this was years ago, shouldn't take advice from somebody who took the subway in, right? Like, it's the idea of like, who are you listening to here, right? And so you do have to be careful who you listen to, because honestly, when I talk to people that are worth $100 million or more, they did the exact opposite of what the conventional wisdom is, of what you're advised to do. They did not diversify like crazy, put stuff in index funds or whatever. They found one business or idea, whatever, and they just put everything in it, and they really worked hard at it, whatever, and they grew their wealth. And that's how people become wealthy generally. There are different ways people do it, and some diversity can be good. But in general, if you follow these safe and secure strategies that, they say are safe and secure, there's so many reasons why I can find holes with that. But, you have to be very careful who you listen to when it comes to your finances.
Yeah, I thought it was really insightful. We had a couple of months ago Michael Sonnenfeld on our show from Tiger 21,
Yeah.
and he shared their portfolio allocation model. And what's fascinating is you would think the 1/10 of the 1% of the best investors in the world would have a different model, and they only had actually 20 to 22% exposure to public equities, right? So what does that tell you? I mean, that it's
Yeah.
definitely, skewed in favor of this 60/40 approach, which is completely broken.
Well, the other thing too is like, and this is a really interesting concept, but the more money you have and the better your network, you and I were talking about this before we started recording, you get access to deals that are private deals that no one has access to. My friend Justin Donald calls these invisible deals, right? If you're simply trading as a retail investor, I mean, you think of it this way: when Facebook went public, or if Twitter went public, there were people that were in the room and got a chance to invest at a much earlier round. And those are the people that sometimes made 100x or 1,000x on their money, right? Because they were in there, they had those networks to be able to do that, versus a retail investor that got it when it went public. You're getting it at the last kind of available thing. And again, for liquidity and for being public, there's a huge premium you're paying to be able to have that opportunity, versus if you get a private deal, something like you have that you offer your investors, or we have that we offer our investors, it can be something that no one else has. I've had a few deals that are completely exclusive. There's no other, for because of a relationship, because of the size of what we're bringing in, because of whatever. It really allows for something unique. But again, if you just simply follow traditional wisdom, it really will leave you at the best, middle class with some savings and maybe a little bit of income, and at the worst, you'll be poor. You'll just continue to stay poor. And it's unfortunate that this is what our financial kind of system has, or even the financial education or the investment world has become, that things have to be private for them to be, for these opportunities that are out there.
How have you been able to help newer investors who've, just getting into passive investing, looking at some alternative assets? How have you been able to really help them to understand, in terms of a risk perspective, getting into something new like this? What are some of the strategies that you've done to help them with that?
Yeah, so I think for newer investors, some of the biggest pitfalls having all these conversations with investors, I realize, I think the number one pitfall of a new investor who only, and again, I think of a conversation I've had multiple times: physicians worth, $5 million, has done, only done stocks and bonds, and has a money person that is their advisor. And for them, it's just, it's hard to get the idea of like, I can actually invest in something. And if you have a net worth of 5 million, putting 50 or 100,000 into a deal is not a lot of money compared to your net worth. Now, for some people, that's a lot of money, and so that obviously everybody's situation is different. But the biggest thing that I find is really the analysis paralysis, right? That there's no one, like, you're the one who's kind of pulling the trigger. Okay, I'm going to do this. And I think when you actually make the decision that I'm going to invest in this deal, or here, this is one thing I talk about in my book: give yourself a timeline, whether it's 30 days or 60 days, and say, okay, I'm going to, find people that through podcasts and online, I'm going to find some different sources or network or go to meetups. And within the next 60 days, I'm going to invest, I'm going to look at 5 to 10 different deals, and I'm going to invest in at least one. Right. So what you've done is you've given yourself a timeline, and you actually are going to make a decision. Now, it probably will go just fine with the deal you invest in. It probably will go okay. But, you're going to learn a ton. For me, it's like if you're playing, I don't know if it, if you go to Vegas and you just watch people the whole time playing, it's like, well, that's great. But if you actually have money in a poker game, you're going to pay attention. You're going to learn, right? And I'm not saying it's like gambling, but it's, if you're investing in a stock and you actually have money in there, you're going to pay attention. And so for a lot of people, it's just getting from, this is an interesting idea, this is a concept, this is something, oh, this could be interesting, to actually where I've invested now, I'm seeing cash flow, I'm seeing this deal work, and hey, this is really great. And I can actually put more money over here so that I can actually sell my business, and I actually have a way to generate income. A lot of people haven't figured out how to solve that. I've sold my business for $2 million or $5 million, whatever. I've got kids that need to go to college. I've got to pay for expenses. Well, how do I do that? Well, some of the stuff that's out there right now, there are some income things, but what happens when rates drop again and some of those income things go away, right? You need to be able to have ways that you can generate cash flow or appreciation in your life. And so that helps those kind of people. It also helps people that, like the doctors that I mentioned, that net worth of 3 million or more, that are like, if they just started putting some money into this other bucket that I call the passive income or the investment side, they would start to generate income. And then they could really decide, do I want to fire myself and stop working? Or even if I keep working, I can do it on my own terms. And that's a great feeling for people when you know you don't have to go to work, when your passive income covers your living expenses. Maybe not your income yet, but it covers your living expenses. You really are free. You can choose, okay, do I want to go part-time? Do I want to keep doing this? Do I want to pick and choose? A lot of people cannot quit their job. Even high earners cannot quit their jobs because they haven't figured out a way to generate income outside of their job.
What do you think is your philosophy around passive investing versus growth?
Passive investing versus growth. I might need some clarity on that. So passive investing, meaning...
Yeah, so basically income, right? I know there's some proponents on the passive income side who are just, basically focused on creating as much passive income as fast as possible so that you can have your passive exceed your, expenses and claim yourself financially free.
Got it.
Versus another scenario, which would be, growth, right? Building up your balance sheet.
Right. Okay. I got it now. I got it. So passive, the income side of cash flow versus appreciation. This is a question I ask every investor when I get them on the phone. I was like, what's more important to you, cash flow or long-term capital growth? And I used to feel like, they're kind of both important, and having growth is good and income. I've become much more one-sided on this. And I think cash flow is number one. I think in general, once you have enough cash flow, or if you're super high net worth, you can say, okay, well, I don't really need cash flow because I've got another sources coming in, whatever. But I even look at that and say, well, probably you have some cash flow coming in somewhere, because at the end of the day, the first form of financial freedom, and for me, it wasn't that much. I realized I was spending maybe 60, 70,000 a year. If I covered that number, then I had enough to be able to choose whether I wanted to go to work or not. I had enough where I was able to choose how I wanted to go about things. Now, again, I think everybody's situation is different. And again, somebody who's super high net worth, if you're 10 million or more net worth or 5 million or more net worth, you have enough, net worth that you'll probably be fine whatever you do, unless you're buying fancy houses and flying on jets all the time, whatever, you're going to probably be okay. But for most people, the first step is to find a way to generate enough cash flow to cover your living expenses. And if anybody's played, I have it on the shelf behind me here, the Cash Flow 101 game that Robert Kiyosaki also created. The whole point of the game is to get out of the rat race, right? Get out of the race that you have whatever your expenses are. If you can cover that, and if you're a doctor, maybe your expenses, your income's higher, but your expenses were higher. Whereas if you're a mechanic, maybe you had a different ratio. But so I'm a big cash flow person. I think, and we do have some deals where it's making a lot of money someday and it's good. But I think especially these days where it's hard to find real estate that cash flows. That's why we've shifted. I know you guys are doing a lot of alternatives to real estate, such as oil and gas, and we're doing business stuff and ATMs and other things that are more cash flow related. But I'm a much stronger proponent for most people that cash flow is the most important thing.
What if everything you thought you knew about investing was wrong? Would you like to create a wealth strategy like the top 1% have and get exclusive access to top private equity deals that provide downside protection, tax efficiency, predictable cash flow, and have a lucrative upside? Discover how with the Pantheon Advantage and join our investor club today at pantheoninvest.com.
Yeah. Interesting. I'll play devil's advocate for a moment. Sure. I've actually had extensive conversations with Tom Wheelwright about this, and it's really fascinating, right? Because on the surface, you might think, okay, I've just got to keep growing that passive income. And so if I take $1 and then I can convert that to whatever the return is, say, 5-10%. And let's actually play out a simple scenario for folks to, kind of drive home the point. So let's say you have $100K to invest, and you put that into real estate that's producing a 10% return, which would be nice, but for round numbers, let's say you're getting a 10% return, it's got a 5-year hold to it. So you're making 10K and passive income over the next 5 years. So at the end of 5 years, you would have made 50K and passive income, get back your principal of 100K. So now let's juxtapose that with putting that 100K into a growth-based opportunity that doubles your equity, let's say, in 2 years. So now you have 200K in the second year, and then you put it into that real estate, and now you have 20K, and then 20K over the next 5 years, right? Now you've just made like 100. You've actually doubled, what you've done in a shorter amount of time.
Yeah, I think that I think it really depends on what someone's goals are. Again, I think, and your point is correct. Now, most capital growth strategies I see are typically longer term. They're typically 5 to 10 year type of things. If you had a 2-year, I'm going to double my money in 2 years, I would look at that as that's an unusual type of deal. I mean, they are out there, they do exist. There are things that do that. And I think it just really depends on someone's goals. So, I think, again, if somebody am I looking to continue working? Am I looking to retire? There is a conversation around, it's not, one size fits all for everyone. But, I think, and eventually too, the goal of that example, if I understood it correctly, was to get to a place where you are getting cash flow, right? So it's like, you're going to get it now or you're going to get it later. But what the cash flow enables you to do is to be able to live the life that you want. And so if you're already high net worth, it probably doesn't matter as much. But if somebody is a professional, they're making 100,000 to $1 million a year, and they don't have, maybe their expenses are high or whatever, to be able to put more money into something that generates income for them, that, hey, I have a choice here. I think there's a powerful thing that can happen. So again, not everybody's goal is that, and people where they're at in their life. Again, if you're high net worth, it's really not as big of an issue. If you're looking at total return, I think if you're high net worth and you're looking at total return, I think that's just fine. But I know a lot of people that are just trying to figure it out, and they're not quite there yet to try to sort that part out yet.
Yeah, good points, Bronson. I think the takeaway, right, is, it's all very individualized based on your goals and what you want, and then trying to do that thorough analysis on, what kind of opportunities are available, what does your time horizon look like, what does your risk tolerance look like, all of those kind of things. So, yeah. Do you have a particular investment thesis?
My thesis really, I mean, there's a few things that are really become core values, and I think whatever you invest in, a lot of Warren Buffett's sayings are key to me, but really we have 3 things that we look for in any investment that we do. One is making sure that whoever, we invest with, whether people invest with us as passive investors or we invest in other deals, I'm a passive investor as well. But really making sure the values are aligned. I used to think everybody had the same goals, the same vision. I found a lot of people want to raise money from investors, and they don't want to do any communication. They just don't want to hear it from investors. They don't really want to, they feel like investors are annoying. And we look at really investors as partners. And that's another kind of core value, is just having investors really be long-term partners, in our projects, and also the partners we work with in different assets such as ATMs or car washes or oil and gas, or we look at those as long-term partners with us as well. And then the other thing is really being very transparent in our communication. So we try to be very making sure we're communicating transparently, making sure our partners people have access to everything they want. But I think, when it comes to, what we're actually doing, it's really trying to find the best, possible return for investors with minimizing risk. And there are different elements of that. So again, we've done VC deals that have a potential 100x return, right? And that's a different type. So that goes against the cash flow thing that I was saying earlier, right? And then we've got stuff in senior housing, which is more of a longer term appreciation play. We've got ones that are like the ATMs or oil and gas that are more cash flow related. So I think we just have provided a variety of things for investors, and it really comes down to making sure that, it's a fit, right? So what this investor is trying to do, whether it's a tax reduction, it's a cash flow, it's appreciation strategy, that it matches up with the investment that they're in. And so when I've had a call, and this has happened before, where somebody say, I'm looking for 100% return in 1 year. And I say, well, that's not really what we do. Like we're not really we don't really have those types of deals, right? We've had traditional multifamily stuff. Now we have a recessionary income fund, which is like a debt fund. We've got some other things that we're doing that provide cash flow or appreciation or other high upside type of things. But it varies based on kind of what people are looking for. So I think, a lot of Warren Buffett's saying, better to buy a wonderful business at a fair price than a fair business at a wonderful price. So just things that are great business opportunities, great investment opportunities that we find are conservative, that are not lofty assumptions and trying to shoot for the moon in general, and just really making sure that we have good partnerships with people that can be for the long term. So those are a few of our values.
Yeah, that's great. Slow and steady wins the race, right?
Yeah, it's true.
Yeah, I think too often we're all looking for that silver bullet, right? I mean, it's amazing to see how people play the lottery, the Powerball. I mean, it just so shows you the psychology behind all of this investing, and it really does take some real foresight and some discipline, right, to invest in the right assets and start looking at this, at a long term. I mean, family offices invest for 25 years at a clip, right? Not the next month, the next quarter, things like that. So speaking of market, I know you follow a lot of market economic cycles and kind of tracking that and everything. Any thoughts from your perspective on where we are in the cycle, kind of what you're foreseeing for 2024?
Yeah, so my crystal ball is broken. I don't know exactly what's going to happen. Obviously, they've forecasted several rate cuts. I think it's hard to say what is going to happen, because I think we're seeing now a lot of times. I just had a panel recently with a few experts, and it's hard to really get good information. I still think inflation is much higher than what it's being reported as. And so while the Fed is patting themselves on the back saying, hey, look, inflation is down to 3% or whatever, I think we're still much higher than that, substantially higher. And so there's an incentive they have to not. So it almost, to me, it almost feels like a sideshow, even though it dramatically affects the markets, every market, and what the cost of money is, what rates are, where they're at. And so I think, regardless, one thing we've tried to gear ourselves toward is that if rates stay high, we have investments that work for that. If rates come down, it's hard to time a market, but I do think as an investor, this is a valuable skill that I didn't realize. A lot of investors are really kind of one-trick ponies, where it's like, oh, I do multifamily investing, or I do crypto, or I do businesses, or they only do one thing. But there may be a time where it's a great time to own precious metals. It's a great time to buy businesses. It's a great time to buy real estate. And so, right now, I think real estate's challenging because of higher rates. There's not a lot of cash flow there. I found I do own a lot of precious metals, which I'm pretty bullish on in general, just because of all the creation of currency that's happened. And again, that's less of a cash flowing investment, of course, but a store of wealth and an insurance. And then there's other things like businesses. There's other things like oil and gas. There's commodities. There's other things that we really like as well. So I think in any market, there's always a transfers of wealth going on. And so it's just trying to get ahead of that and figuring out, okay, well, what right now makes the most sense? And I talk about this in my book, where we look at historical valuations for different asset classes, right? So when you look at a price earnings ratio in the stock market, how are stocks valued? Well, okay, right now they're still fairly high. If you look at a valuation of real estate versus income, well, we're still kind of relatively high. If we look at other things, there are things that are maybe not be as good of a deal versus other assets could be a great deal. So I think just looking at different assets, being open to that can be really valuable as well.
Yeah, I can appreciate that for sure. Bronson, what's your top personal productivity hack?
My top hack, this is going to sound really simple. I know you're a big mindset guy as well, but this one is, I have my sheet right here. This is a shorter day than usual, but I'll have 4 different kind of quadrants. I'll put on kind of one corner, I'll put my schedule for the day. I'll put kind of the things related to work, what I need to get done. I'm a big cross off the list kind of guy. So this is very low tech here. I'm not giving a high tech answer here. And then I have kind of my other or personal stuff I need to get done, and the stuff that carries over to the next day. And it's amazing. I use a Google Calendar, but just being able to put stuff on there the night before, it gets me kind of visualizing my day, what's going to happen, what are the gaps in my schedule where I can get certain things done, what are the things that are scheduled. And I think really high performers, they're really good at schedule. And so I have an assistant that helps me with my schedule, but just getting that, okay, what am I actually going to work on this day? Is this, and I know you've been a part of a strategic coach, a part of a group that we're a part of, where they talk about having different types of days, right? Your focus day, your buffer day, or your free day. and just really understanding what you're going to do that specific day. But again, for me, it just feels so rewarding to cross things off a list, or to be able to feel organized when I start a day. Okay, I know exactly what I'm doing that day. And it's, the idea of planning your work and working your plan.
Yeah, very cool. I know there's something about the brain when you put pen to paper, it's just, it reacts differently in the brain versus typing it. So that's really good. And I know you're a big runner, Bronson. So what types of running are you into, and what, do you have any events coming up that you're training for?
Yeah, thanks. Yeah, I do. I do what's called Spartan races, which are, it's like a Tough Mudder race. So they have obstacles in, you carry a 60-pound bag up a hill for half a mile, or you climb something heavy and you submerge underwater or muddy, whatever it is. And so people ask, well, you pay to do this, or why would you pay to do this? Pay to get beat up, basically. And I say, well, yeah, you do, but it feels great when you finish, and it when you have another race on the calendar, it definitely keeps you motivated. So my next race, I actually have a half marathon trail run with some hills coming up in a couple weeks from Saturday. And so I just find when there's something on the calendar, it keeps me in shape. And as I'm 43 now, so as I get older, it's harder to stay motivated. And so I find having something on there where I'm really pushing myself and competing, and it's very rewarding to see progress.
Yeah, very cool. Well, if you keep doing the Spartan races, I'm going to have to give you my stem cell lead so you could keep those joints fresh.
Exactly. I'll just be totally regenerated. I'll be like, I can do this till I'm 85 because I just do stem cells every month.
Yeah, I'm my latest thing is I'm trying to be the $6 million man. So if I can put in 6 million into my body over my lifetime, then, what can that generate?
That's awesome. Yeah. Is that with today's dollars, or that would be in 20 years, 6 million, it gets less.
Over my lifetime. Over my lifetime with everything that you do. So it's just making constant, upgrades to everything.
That's great. Great. I was going to say, with inflation, 6 million is not as, if you depending on when that 6 million is calculated.
Yeah, exactly. Well, the stakes get bigger, as we go, but there's just so many amazing technological advances I think people just aren't aware of. It's kind of like investing, you kind of have to look under rocks a little bit to find this whole new space. But, once you start getting into it and you start seeing, what's available, and, we've seen people like, Steve Jobs, right? He had all the money in the world, but he couldn't buy another day.
Yeah.
So, what is that investment worth to you, in your body, right? So
it's huge. And that's again, why I'm so active, and why I enjoy the first wealth is health. I mean, if you can live, I just think about it too, if you can live, and I saw this in the medical field, people would be in their 50s or 60s and kind of be at death's door. And I was just thinking, man, if you could have just made some different choices, lost a little weight, not smoked, been generally active, all these people could have 20 more years and good quality of life years. And you think, who does that really benefit? It benefits their kids, their grandkids, their neighbors, the world. And so for good people living longer, I think it's a huge benefit for people to take care of yourself. So yeah, I think that's a huge thing that's super important. So I love that you do a lot of that as well. So we'll have to talk more about that, I'm sure.
Yeah. Do you have a number, Bronson, that you're focused on?
A number as far as how long I want to live?
Longevity number. Yeah.
It's funny. I read this book. Dan Sullivan has this book where it says my goal to live to 165 or something crazy like 56, that. But his idea is, when you have this, when you look at people in their 60s, people turn 60, then they kind of start winding their life down. And then about 10, 20 years, they kind of pass away. But the idea of just being productive for your entire life, as long as you have more things out ahead of you. So I don't really have a specific number, because I think sometimes it's out of your control. I mean, I'd love to live to be 100. I'd love to live to be, have my number 125, whatever it is. But I think it's, some of it too is the quality of life that you do live. You can control what you can control, but making the most of every moment. And, I'll be around as long as I can, and making a difference in whatever way I can for as many years as I have. And I'm going to make choices that I give myself the best chance of doing that.
Yeah. No, that's awesome. I've been living that. So the first time, I went through that exercise, I came up with 116, and since I've actually expanded it to 146.
Nice.
And a lot of people will just think, that's crazy. It's silly. Why are you really thinking like that? Do you really want to live that long and all that? But what I can tell you that's really amazing after kind of having that type of mindset for 7 years now is it really provides freedom of your time and not thinking, because you start seeing, so I'm 54 now, right? And you start seeing peers, all they're talking about is retiring. I sadly lost one of my best friends from college pretty recently who had a heart attack. So different health things kind of pop up. And what it does is it just transforms you from this conventional thinking of, hey, at 65, my life needs to slow down. I'm going to do less. I'm going to have less capabilities, right? My world kind of starts shrinking. So right now, I feel that I haven't even hit middle age, and it expands my present moment, which is really powerful.
Yeah. It is. It's a huge mind shift because, if I think I've got my best days out ahead of me, you're going to make different choices. If you realize, like, I think a lot of people just don't have a plan, and they kind of eat like crap, and they don't exercise, and they make other choices that are just like, they don't really have that vision. And I think in your life, that future vision is so important, where, in the Bible, it says, without vision, people perish, right? So if I don't have some sort of vision for my life, I think this is the reason why so many people are depressed, or they just hate their jobs. They have other things where it's like, if you really have a vision for yourself, and it's a long-term vision, you'll make decisions that are different. You'll start building in a way. And for you, if you're like, hey, I'm going to live to 100 and 160 or 140, whatever, which actually could be possible with technology. And again, it's people that actually made choices to live well and have good cardiovascular health and strength, and maybe didn't smoke and other things, that there may be other options there that they're getting. Now they're able to print organs like out of 3D printing and all this stuff. And some of the things that are coming out, we just don't know over the next 30, 40, 50 years. And so, I just know I've watched people, and I've seen them at death's door, and just saying, I just wish I had made different choices. And so anyway, I think it's really valuable. I look at life as, it's stewardship, right? We steward, you and I, we manage money for people in the sense we manage deals, but also with our time, we're stewards of what we have. And I think time is the most valuable thing. And it's cliche to say that, but it's also, what are we investing with our time? We're investing in making a difference in people's lives. We're investing in our families. We're investing in our health, and we're doing this so that we can continue to impact. And I think it's super valuable. So I love that conversation.
Yeah. Awesome, Bronson. Really appreciate that. If you could give just one piece of advice to the audience about how they can accelerate their own wealth trajectory, what would it be?
I'd say shave your head as soon as possible. No, I'm kidding. I'm just kidding.
I actually got a solution to that: peptides.
Yeah.
Yeah.
That's awesome. We'll talk more about that. Yeah. So one piece of advice that would change your life, I would say there's two parts to this. There's a quote that I love that it says, "You'll be the same person 5 years from now, except for the books you read and the people that you meet." And so, you're the same person 5 years from now. And it's not just about reading books. It's about education, right? It's about learning. It's about growth. And part of that is the people that you meet, the people that you connect with. Actually, you and I, Dave, we were introduced by a mutual friend, and my life is better because we connected, right? I've learned, just even in our conversations we've had, I've learned some really valuable things. We may do some deals together. There's a lot of value there, and a lot of other things in my life, and networks and growth has happened through meeting people or by learning something. And so if you want to change your life, make a goal, commit to reading books, learning, growing, and meeting new people, putting yourself in new rooms. So that's, I guess, my two-sided one piece of advice.
Yeah. Love it. Really good. It's been such a pleasure, Bronson, talking about our favorite topics. I think we could go on for a couple of hours here and look forward to doing that in person the next time. But if people want to learn more about you or what you're doing with Bronson Equity, what's the best place people can connect?
Well, thanks, Dave. I really appreciate being here. Just have so much respect for you, what you're doing, how you've built value for your network, and just would love to continue to work together, find more ways to work together. The best way to reach out is I'm on all the social medias. You can also go to my website, bronsonequity.com. I have my Amazon best-selling book. You can get the first couple of chapters for free there. You can also join our investor club. And then we have our podcast, which is called the Mailbox Money Show. It's on YouTube. It's on anywhere you get your podcasts. But thanks again, Dave. It's been a lot of fun.
Awesome. Thanks. Really appreciate it, Bronson.
Thanks, brother.
Thanks for listening to this episode of Wealth Strategy Secrets. If you'd like to get a free copy of the book, go to holisticwealthstrategy.com. That's holisticwealthstrategy.com. If you'd like to learn more about upcoming opportunities at Pantheon, please visit pantheoninvest.com. That's pantheoninvest.com.